Let's get across what we're seeing, particularly at a macro level at the moment. Luca Santos joining us from ACY Securities. Luca, good to catch up with you again.
Good morning, good morning. Long time I don't see you, actually.
Yeah, that's true. And there has been so much news, of course,
yes.
Just in the past week. But just central banks remain in focus. Of course, speculation as to what the Fed is going to be doing. Let's first start, though, with what we saw in Europe overnight.
Yep.
Any surprises there? What did you get from the commentary?
To be honest, Andrew, any surprise? No surprises. Okay, no surprises at all. I think Lagarde say what she had to say. Inflation, yes, they're doing a pretty good job. Inflation at 2.4, 2.5%. Still a lot to go. Okay, it's not about they've cut interest rates, but it's not about let's cut again in September and December. I don't think they will. Most probably, inflation will be a bit sticky. On Europe still, different from UK in my opinion. But the readings are that yes, we are having a lower inflation on Europe as expected. Okay, as expected, nothing more bigger than what was the consensus of the market already. Well, a 0.1% lower than the last year, but still year over year still pretty. No. Anything crazy, nothing crazy in my opinion. Now, when we look to what she said and what she has to offer to the market is a very neutral to dovish tone, in my opinion. Yes, she has to say, we will be looking to inflation. If we have any uptick on inflation, we will have the doors open to have another hike. But in my opinion, this is the only scenario that they won't be looking to do now at this moment, another hike on the interest rates. Most probably, yes, another pause in the next meeting, if I'm not wrong, in September, and continue to pause until next year to cut again on the rates. But again, I think inflation will be a bit sticky for this year on Europe.
Well, we're sort of seeing that across the channel in the UK, aren't we? That sticky inflation, and perhaps traders now pushing out the bets of a rate cut.
Yeah, actually, I just want to add as well for the Europe is Euro has been very, very strong in the past 2 weeks. Since the beginning of this month, we saw Euro getting all the way back from 107.5, 107.6 now to 109.50. That was yesterday before the ECB when the euro sell off against the US dollar just overnight. But still, I do believe that this is the time where we can see now euro dollar heading lower to 108. Some institutions are already forecasting these. That was the 109.50 was the top of the range, because when we look to a more into a technical perspective on the chart, we can see that this is on the top of the range, and now we may be coming back to 108, 107.5 again. But this is just my opinion. With the sticky inflation, maybe euro can continue to get stronger, and the French elections, and so much more happening. But yes, now talking about the UK, yes, as well, as you just say, across the board is having a very sticky inflation, and UK is not escaping from that. I do believe that there has to be lower for they to cut the interest rates. And just today, we're going to have the retail sales, and this will be presenting more data to us to confirm if the actual inflation is reducing or if the consumer is still spending, and we can probably have an aggregate demand in the future and having a higher inflation rate for UK.
We're also seeing that in Japan, in fact. In fact, we just had the latest consumer price data out in Japan. I don't know whether you had a quick chance to have a look at that, but rising 2.6% in June from a year earlier. So accelerating for the second straight month there, of course. The speculation as to whether the BOJ is actually going to pull the trigger on interest rates.
Well, I think they need more than 2.6%, because otherwise they would hike already. Right, so they went from a ZIP, the zero interest rates policy, to a NIP, the negative interest rates policy, to a zero interest rates policy now. But when we look to Usdjpy, is always the same move, and it's always the forward guidance that they do, sort of they want to call this a manipulation, but as they like to say, the forward guidance on the Bank of Japan. But still, I do believe that they need maybe 2.8, 2.9% inflation so they can hike maybe 25 base points on the interest rates. And yes, that will be a potential good trade on USDJPY when we see Bank of Japan increasing the interest rates once we have certain data line it up for certain things like hiking the interest rates. But for now, no, I don't think they will. Not this year. The speculation was last year.
Yeah.
And then they moved to this year, and then this year they're going to move to next year. So that's what probably will happen.
And of course, we've seen so much movement in the yen too. We're really seeing that at the moment because certainly signs perhaps of intervention there again during this week.
Well, so that's the thing. Everyone's talking about intervention, but I do believe that it's something more combined to a forward guidance from Kuroda, and plus the weakness of the US dollar from the last 2 weeks since the beginning of this month. Because when we look to US dollar index, it has been falling quite a bit. Okay, I don't have the numbers right on my head at this moment, but it has been falling since the beginning of this month, and all of the other currencies are actually gaining momentum, and all the Biden thing and Trump and France elections, UK, so that all of those things is actually making investors think, okay, we should go for safe assets like euro. Gold has been hitting all-time highs again. But in my opinion, yes, we may see a switch on the market now for euro dollar coming back lower, USDJPY continue to go higher, because this move that we just had on USDJPY last week was most probably because of the US inflation numbers that came lower, and then JPY could strengthen a little bit on the forward guidance from the Bank of Japan.